Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yeah, that's right. Mom, look, I'm live on a radio Saturday morning. 2 hours of infotainment is what we're offering. I want to say promise, but man, I like to make promises I can keep. So we're offering you up 2 hours of infotainment today, and you're welcome to be a part of it. Thanks for tuning in. Maybe you're on the old radio, 921-1017. We appreciate you very much. Worldwide on your free download, your iHeartRadio app. Find us there on Real Radio. And, of course, live streaming. We got cameras set up in studio. You can live stream with us. Find us on Facebook. That's Florida Talk Real Estate on Facebook. Thanks for being with us. On YouTube as well, Florida Talk Real Estate, LLC. Home of a ton of informational chunk videos and a live stream. Hello to anybody streaming with us on a Saturday morning. Of course, as I say, you can be a part of it. You got questions, comments, concerns in the world of real estate, want to be a part of the conversation, dial up at 877-927-6969. The first voice you'll hear, the melodious tones of our producer extraordinaire, Timothy. Hello, my brother.
Hello, and good morning, John. How you doing today, bud?
Good, my friend. Nice to see you as always. Let's go ahead and get started for you on a Saturday morning. Of course, I'm your boy, your old buddy, your pal, Johnny C. Your air traffic control. Say good morning to Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, it's been a while. How are you, my friend?
It has been. I'm doing all right. Hanging in there. Good to see everybody.
You look at a crisp $100 bill, my friend.
Oh, thank you. I don't feel that way.
No, but you look at that.
Thank you.
Sometimes looks is all that matters.
It's like an old, crickled up dollar bill that you pulled out of the dryer.
Well, I'll tell you
at least
this.
a $5.
I'll tell you this. Crumpled up 100 is worth the same as a nice
$1 bill that you pulled out of the dryer.
Oh.
Just a single.
You're a Ben Franklin in my eyes.
I say one man's dollar is another man's hundred, so that's fine.
Well,
Right?
now we're getting deep.
Yeah.
That's Mike Crowd, the mortgage guy from the mortgage firm. Hello, my friend.
Good morning.
Looks like you got some haircuts since I seen you last.
Nope.
No?
Nope. The last time you told me that was true, but not this time.
Not this time.
Nope. But I did shower this morning. Maybe
That could be it. That could be it.
I don't think I changed my shampoo. I don't know. I don't really pay attention. Whatever the bottle is there, that's what I use.
You just grab for it.
Yeah.
That could be disastrous.
Yeah, I think one of the benefits of balding over the years is that I just don't really have to pay attention to it's not. I don't need anything special.
It's not
Like I could use hairspray. I could use it on my hair. Sure, I would do that. No problem.
right. Body wash.
Yeah,
Doesn't
whatever.
matter.
Yeah.
I'm kind of the same way.
Yeah.
Whatever. Does it suds up? Let's go.
Yeah, exactly.
As long as
Lather.
it's not Nair. We don't
Lather.
need Nair in our hair.
Yeah.
You know what I'm saying?
But yeah,
When's
it's
the
good to
last time
see.
you
Good to
smelled-
see.
When's
Huh?
the last time you smelled Nair, by the way?
Wow.
I don't know if I've ever smelled it.
Oh,
I
really?
mean, I know what it is.
That is a very distinctive smell.
Yeah.
Yeah. Oh, yeah.
So you really can't just sneak that into somebody's shampoo bottle. They'll notice it.
That's a tough sneak.
Okay.
Yeah, man. Are you there with me?
I mean, I've never smelled it.
Does
Really?
it smell
No,
like nail polish remover kind of? Does it have that smell? Or it's
way
different?
more chemically.
Way more-
Like it smells like it's gonna burn the hair off. you.
Okay.
It's what it smells
Yeah.
like. Yeah. Timothy, you with me? Nair?
I never used it,
Why?
so I don't know. I don't think I've ever smelled
Never.
I'm
had
trying
it.
to.
Never
I
had
want
a
to know
woman
what
in your
Johnny
life
was
that
using it
Nair?
for.
No.
Yeah, what was going on? Why were you
Well, I've
so
had
close
I've
to
had
some
women
Nair?
in my life that Naired in the past,
Yeah.
and they actually have
Right.
a Nair product for men. And I did try it on my back once, and it does smell.
Your
the same.
back.
Yeah, my
Mhm.
back.
Mhm.
back.
I don't have a hairy back either, so
Yeah.
let's figure out why I did try that.
Thinking like a Brazilian, but then like a torturous version of Brazil. Like what country would that be? Maybe not call them out.
Yeah, no, it's
Probably
probably
not
be
whoever
best.
it is,
Yeah,
right?
We're trying to broadcast.
We will nair you.
All right, we're going Brazilian.
All right, giggity, giggity. Sorry for taking us off the tracks here, but we were in stall mode a little bit because, well, our fearless leader was running around panicking. Is everything all right? Jim DePola, told you for 11 plus years now, he runs a top producing Keller Williams team. Keller Williams Innovations, the Florida Home Pros team. Is everything all right, Jimmy D?
Everything's fine. We
Okay.
had a little bit of an echo.
When we
So I
start
had
and
to
you
fix
jump out of the studio, I'm like,
Uh-oh.
oh no.
No,
We're
it
going to talk
wasn't.
about Nair.
No, it wasn't that bad. It was just an echo. Thanks, Mom. She was letting us know we had an echo. So
We should be good, right?
yeah, we're
You took-
good
you
now.
took
I had
Ross's-
when
yeah,
Ross came
Ross,
in, I
yeah.
didn't have him muted. So that's what the problem was. Happy South Florida, everybody. Kind of a
dude.
little bit kind of sunny, kind of rainy day. I don't know.
I guess it depends on where you're at.
Yeah, it was.
Yeah.
It was I'm gonna be traveling all over the place, man. yesterday I started off in the morning, and I hate this in the morning, is Hallandale Beach. Driving down to Hallandale Beach in the morning from Jupiter is not
You remember
fun.
you used to make us drive down there?
I know, Gulfstream Race, and we were where I was 1.3 miles away. When I was driving down there, it brings all these memories, right? Turnpike to 595 West, 595 West to I-95, Hallandale Beach Boulevard. Still don't like the poker place down there.
Still,
No, still don't like it, but it was a really nice compound and everything. It was fun going over there. But anyway, so yesterday was Hallandale Beach all the way up through Palm Beach County. Today's going to be Fort Pierce. Tomorrow's going to be Stewart. It's going to be a busy weekend.
Nice.
Lots of customers. Yes, people are still buying and selling in today's market. Everybody's saying, everybody has an opinion what today's market is, but there's still people out there every day with real estate needs, and we're there to help them on many, many different levels. I have a lot to talk about this week. I'm so glad that we got Ross back. There's so much going on with insurance. There's a really good article today, Ross, in the Sun Sentinel. Even though I don't like their app, I'm going on record for that. Sun Sentinel, change your app. It's disgusting. As a former employee of the Sun Sentinel. But there was really good article.
Employee.
Yeah,
So now
no, I wasn't disgruntled except for the app part. But they had a really good article saying what would have happened if Idalia had hit the same place that Ian hit. What would have happened with our insurance industry if that had happened? I thought that was kind of an interesting take, and the news was not good. It was a little scary. Scarier than the hurricane. So we're going to talk about that with Ross.
What would have happened if they hit places that haven't dealt with claims yet? All right, that's the scenario. Like,
no, the scenario is like that the area had hit. What was it, Keaton Beach or something? Never even heard of that before. Nothing bad with it. That's probably a good thing. It's probably a really cool area. It's probably because
if
nobody
they had
knows
the
about
storm surge again, and remember the flood, like how many cars were flooded?
Oh, yeah.
Yeah.
Yes,
So if it had gone and if tracked that past of Ian, what would have happened?
Oh, gotcha.
What would have happened with our insurance industry, and how would we have been able to afford to pay the bill? So we're going to talk a little bit about that because insurance is really the 1-2 punch right now. Mike should have a little bit less of a frown on his face than last week. Mike Rauch from the mortgage firm. Interest rates went down. So a little bit, I think, Mike, we're going to talk about that, but I think they went down. Freddie Mac says they went down, but I don't know if that's what's happening in real life. So we're going to talk about that. Before we start off with all that, I'd like to do some shout outs. If we can start out with a shout out that's going to be very close by, like across this little glass thing right here.
Hello.
Shout out to Jim and Carla. They got their house under contract.
Yes.
Jimmy, how long did it take us to put the house under contract? Was it 4 days?
Yeah, about 4 or 5 days.
Yes, slacker. Okay, and then
was on the market in less than 24 hours. The people that we ended up going with
was the first
put in an offer. They were the first ones to
show it first offer, but we waited a few days to look at everything else, and they ended up being the ones. So it was a perfect match. We were just talking about this off the air.
That just goes to show you got to, if you're a buyer, you got to be ready to pull the trigger when that house pops up for you.
You do, because last Saturday, remember, Jimothy said it didn't take long before he went, do we have to continue to show?
Yeah.
Like, I don't want to show it anymore.
Yeah, are we good? We're good, right?
Yeah, because we had, I think, a total of 27 appointments. I don't think we showed it that many times, but boy, there was quite a few on that Wednesday and Thursday. That
in
week.
4 days.
Yeah.
Right, a 4
and we
day
got, I
process.
Think 4 offers within 48 hours.
Mm-hmm.
So that's when you put it out there. Hey, bring your, we have multiple offers. Bring your highest and best. And that Sunday we decided, on which one we wanted to go with. So
it
it's
was
exactly
too
what I
bad
said.
you missed out because Jim, when he does his 21-day plan, the 21st day, if he's still not in contract, he wants a full weekend of showing. So he puts you up in a 4-star resort for the weekend and to get you out. And then he really just puts all the appointments there. So too bad you missed out on
I thought
that.
he was my buddy. He throws me under the bus. I don't understand.
I tell you what,
Giving up all the secrets.
I tell you what, Mike, I don't mind missing out on that one.
Oh, no?
The peace of mind that we have right now is just very good. So,
Yeah,
I tell you what.
that's the part. Jim and Carla are the typical seller buyer. They need to sell their house, use the proceeds from that house to buy the new home. Jim and Carla's unusual circumstance, because each case is like a snowflake,
That's right.
is they're doing new construction. So they're not exactly sure of the exact date that they can move in. Unlike a resale house. Resale house, you pretty much set a date and you try to reach that date.
Right. Hand off keys, get new keys, bada bing, bada boom.
But with developers, they give you a window of time, and they are developers, God bless them, right? So, they'll tell you that they're going to close on Tuesday. They just don't tell you which Tuesday, right? So that's the way it works. Sorry, I have a lot of contractor friends that are going to be calling me up after the show right now.
The builders are great because they're like, we don't know when we're closing, but when they're ready, they want everybody ready. We're ready, guys, to close tomorrow. And we're like, what? On the lending side, what? We got to get insurance locked in. We're waiting on Ross. Can't bind.
Well, here's another thing, Mike. Here's an interesting one. Talking about that, I want to close quick, right? Remember Marshall? He came to you, but he ended up doing new construction, right?
Yeah.
Well, we went in for the final walkthrough. His home was Ryan Homes. Jimmy, do you mind if I mention the company that you're working with?
I don't see.
Yeah, they've done great with you, and the communication.
I'm super happy with them. I'm sure that they.
So it's Synergy Homes for Jimothy, right? They're very well known for like taking individual lots and building on one lot at a time. For each individual. I wouldn't even not always spec homes.
No.
Sometimes spec homes, you buy the lot, you start building it, and then the person comes. This is more like Jimmy went out. They had a lot. If I'm not mistaken, Jimmy picked a lot. Is that correct?
No. This was a spec home.
Oh, it was
this was one of their specs. Yeah.
Sorry, dummy.
They do that, right?
Yeah.
They'll do that where if we wanted to choose a lot, we could go buy that, and then we could build one of their models on there. They do that as well. This particular one though was a spec.
Oh, I remember that.
So they had already broken ground on yours. Okay.
Yes. They had already broken ground. I forgot about that. But so
barely.
Yeah,
I mean,
and they've done great, but the other developer, which has done a nice job on the house too, but they came to in the final walkthrough for the final punch out, like to do all the punch out lists. They said, "Hey, part of your roof isn't on. These houses have a cement tile roof, and then another part of the roof is metal, just to give an architectural detail. Metal roof isn't available right now, but they need to close, so they wanted to do what's called a temporary CO, and take a temporary CO and close on that. Well." Found out at the closing that Marshall ended up using a credit union from the military or something.
Okay.
So I was like, well, I know a regular lender for the builder will probably have no problem using a temporary CO to close. But is the mortgage company, a mortgage company that's not connected to the developer, are they going to be okay with it? So we called them up. They were like, well, we want to know how much the roof is. We want an escrow holdback from the developer. They started asking a whole bunch of questions.
Yeah.
When we went to the developer, they weren't real happy with that information. And within 6 hours, they're like, roof's on. We're getting the CO
I was
on Friday.
Say, what is temporary CO? I mean, here's the thing. Whether you're at your credit union or your builder's lender or the mortgage firm, we're all following the same rules, right? So this is a standard conventional loan, likely.
Right, it is. Yeah,
and so everyone has the same rules. So as far as I know, CO being issued is required. I don't know about a temporary CO. I doubt that our underwriting would look at that favorably. Maybe if you're doing an escrow holdback, that's a way to say, okay, we're going to close. We understand that there's still some, items that are subject to completion or subject to repair. And as long as you close within a certain time frame, probably before that loan is delivered as a mortgage-backed security to Fannie or Freddie, right? That's an important distinction. Then some lenders would tolerate something like that. But
maybe,
you got to have the CO issued.
But we solved it, so it worked. So congratulations to Marshall and Chrissy.
I wondered. So that's an interesting case. So he because I remember talking to Marshall, and he ended up doing new construction, and of course, just like Jimothy's case, the builder's preferred lender, they incentivize you to use them. And a lot of times it makes sense, and it's hard to compete with the incentives. I'm curious what made Marshall switch.
He said it was bad communication. He didn't trust the lending company.
Oh,
I'm just saying, I'm not saying anything bad against the lending company or anything, but that's
okay.
He wasn't real confident about the communication. Didn't feel all happy.
Yeah.
It wasn't rainbows and unicorns for him. So
And what's interesting? He wasn't, I don't, if I'm remembering, he wasn't a real complicated case. So
No,
they must have really
he's
screwed up
very
in order to
strong.
lose this business.
He's
Yeah.
very strong. But I just wanted to bring up that sometimes the developers do want to close super, super
Oh,
fast.
yeah.
So they were trying, because Marshall kept saying, we don't have to close now. We could wait a couple
for
of
the
weeks.
roof.
Yeah, wait
Sure.
for the roof. But they were just rush. But we got it fixed, so it didn't matter. But getting back to Jimothy's case, he's the typical seller buyer. So we had to make sure that the buyer that he got, even though we had all those offers and all those showings, what we really have to worry about with Jimothy's case is that to make sure that they would give him the time that he needed to close and a flexible closing. Because we don't know the developer is going to close at the last week of October or the third week in November.
Right.
We just don't know for sure. And there's a lot of things out of their control. What happens if a hurricane comes and it really slows down supplies or damage or materials and things like that? So we had to be really careful. So we found the buyers have been very easy to work with so far.
Yes.
And we went through the inspection, and there were, issues that we had to deal with, but we were prepared for that. They were very reasonable in asking for credit for the repairs. Jim and Carla were very reasonable in responding. So I feel like everybody was happy with the way that worked out.
Absolutely. Couldn't be happier, actually.
And right now, knock on wood, the seller buyer system that we talk about every single day for 8 years now is working for Jim and Carla right now as we speak. So congratulations on them.
Yes.
It's funny. A lot of times it's a stressful scenario to begin with, but a lot of that stress depends on the disposition of the people involved.
Sure.
Right. And you say whether you can, it's very easy to get emotional about this stuff. And if you can kind of cut that part out and just look at it logically, and seems like you got good parties on both sides.
Yeah.
And a good realtor sitting right over here.
Yeah, sure.
Because part of the stress is, what's going to happen, but Jim makes it very relaxing. I mean, I trust you 800%. So that there was a lot of that stress that was not quite there because of that.
It's above 100, but it's not 1,000%. What do you think about that? It's like
you could do a little.
Yeah, 800. Where are they?
So, well, I'm just really happy that everything's working out the way it should. It actually is a little extra pressure when you know everybody, right? He's been hearing me talk about this forever, so now I'm doing it in real life.
Now you can't mess it up.
Yeah, it's like if I screwed up now, it's like it's pretty tough. Just a couple more shout outs to Shane and Angela. We just put their 1-bedroom, 1-bath intercoastal condo in North Palm Beach on the market. Cute little, what do they call that?
Cottage?
No, Pierre de Terre. It's a French name for like small cottage, right? It's a small like unit that you come, somebody on the internet. Let me know.
You say it.
I can't even pronounce any French. I don't even know I went there. But anyway, the bottom line, and Pierre de Terre, I think it is. Piece of land. De Terre. Yeah, I can't pronounce it.
That makes sense.
But anyway, the bottom line is
You sounded Canadian.
Well,
what's awesome about this community is that you got boats surrounding you all over the place, because you're literally a football field from the intercoastal and this property, with a finger canal as your view out your window, which is awesome.
Yeah.
And then it's got the pool. It's a nice little community. It's got 3 buildings over there. What's really special about this property, though, is that it's been fully renovated. So it's super maxed out. Every square inch of this property has been touched in some way, from the ceiling, the floor and the baseboards, all the way up to the ceiling with the recessed lights. Everything's been touched. Perfect condition. They're only asking $295,000, which is pretty nice to live on the water. The HOA is very affordable. Condo fee is very affordable. And looking forward to getting that sold. Thank you so much. It's also available as a seasonal rental for this season at $3,000 a month. So we're hoping to sell it. We're hoping. The other person we wanted to do a shout out to was to John and Katie. John and Katie, we just closed on their house last week. This was a 3-bedroom, 1-bath pool home in Lantana. We actually had 2 for John and Katie that were 3-bedroom, 1-bath pool homes. The one on Orange, I think it was only on the market 9 days or 11 days, I think, or something like that. We got a little bit above list price at the closing, And congratulations to them on selling that home. Then we put, at the same time, we put another one of their homes on the market that went under contract just recently, 887 Duval Street. So that one's gone. Bye-bye. That one's gone too, the 3-bedroom, 1-bath.
Awesome.
With the pool. We actually had to drop the price on that because of a roof issue that we kind of knew about, but we still got a very good price for it. Everybody's really happy. And that gave John and Katie the ability to work with Mike to get a new home that I think they just went under contract and did the inspection, Mike.
Yeah. So last week.
Yeah.
Not this most recent week, but the week prior.
Yeah.
They went into contract on their purchase.
And isn't it Claremont? I can't remember the city that they're in.
It's northern
I've done
Florida.
So many.
Yeah, it's northern Florida. I forget exactly which city it is. I can find it out.
So with John and Katie, we used so they're very interesting because we sold 2 of their properties. They needed one of the properties sold, so they became in order for them to be, quote, a seller buyer. Then they're going to sell everything down here, and then they're moving up to Claremont, where they're buying a very large piece of property, live there, and get away from it all. I'm very jealous for them.
Yeah. How
They've
far
worked
north?
really
Like,
hard.
where is this? They closed a week ago, and
It's
then
a
here
little-
comes Adelia.
It's like
Oh,
near
geez.
Leesburg or something, if I'm not mistaken. But what we did for them, so what we did for John is that John and Katie, we also got them a top agent up in that area to find the land that they were looking for. So they went up there a couple times. They were very happy with the agent, really happy with the results. And so far, knock on wood, the place they're getting is super awesome. And the ability to do some development with this land that they're buying is going to be great.
Oh,
So
cool.
then when they buy that house, now that we've sold the 2 properties for them, when they buy that house, they're going to fix it up, and then they're going to move up there, and then they're going to sell their last home down here with us. So
Perfect.
it's going to be a lot of deals with John and Katie. They've been great to work with.
Yeah, really cool. Really cool.
Very cool people. And on top of their game, they got a lot of moving parts, and they've always seemed to get everything under control.
Good.
Great people. Thank you so much, John and Katie, for trusting us. They're even using our contractor, Pete Walsh. We've had talked to Pete on the show a couple of times.
Oh, yeah.
Pete Walsh Painting and Contracting. He's done all the renovations for each of the houses. And let me tell you, the money that John and Katie have been putting into the houses, like fresh paint job and a couple little honeydews here or there, it's making a difference on the prices they're getting. So
Pete dues.
Yeah, Pete dues. That's true. Not honeydews, Pete dues.
They're moving up to Lake City. Which
Lake
is,
City, that's right.
Like if you took Jacksonville and Gainesville and kind of did a little corner connection like that,
Oh, all right.
north and so yeah,
Excellent.
west of Jacksonville, north of Gainesville, kind of.
Well, it sounds exciting for them. Really does.
It sounds like a
Yes.
nice place, Lake City.
It does, doesn't it?
Yes.
You know what they probably got a lot of up there?
Lakes.
Yeah,
I think it lakes.
Lakes.
Grocery
Awesome.
stores?
Lakes.
Yeah.
They got lakes.
Publix?
So
There's a
yep, they got Publix too.
Yeah, there's a public.
So also wanted just to give out a couple other shout outs. I wanted to say shout out to Bill. Thank you for trusting our team for selling a property. One of their family members passed. My condolences to Tiffany and her family. And we're going to go out and get the house sold. We just took the listing yesterday. It'll be on the market next week. Looking forward to that. That's a 3-bedroom, 2-bath, single family home in a gated community in Wellington. House is in very, very good condition with newer roof, recent AC. I won't want to say brand new, but recent AC. And the house is ready to go. It's a little dated, but it also is in very, very good condition, and it's move-in ready. So we're going to price that thing right. We're going to get it moved for them. And we'll be competitive in the neighborhood. It's going to be great. And I feel like there's one more person. I had such a busy week last week. Oh, how could I forget? Chris. That was my Hallandale Beach guy. So Chris Peterson is, hope I never say last name. Sorry about that, Chris. Chris came to us as a kind of like a Zillow lead. And he saw one of our properties, the houses in Lantana, the pool homes. They weren't for him, so he decided that he liked the way that we worked and decided to work with us. He realized while he was turning in offers that he needed to sell his home to buy a new home, and he turned in offers 3 times, and 3 times he had been rejected because he needed the contingency of selling his home to buy the home. All the sellers got uncomfortable because his house wasn't on the market. So he said, "Hey, Jim, do me a favor, put the house on the market."
Right.
So we just went down yesterday to shoot the photos. and we'll be putting that on the market Tuesday. Actually, it's kind of on the market now as a coming soon because we're going to be doing an open house next week. And it's a really nice home. It's a 3-bedroom, 2-bath home, fully renovated in, I think it was 2017, if I'm not mistaken. And some of it was renovated last week. But the house has a newer roof, newer AC, new flooring, new paint, one of the 2 bathrooms is brand new everything. The other one has been upgraded. Brand new kitchen, which is in excellent condition. If you're a chef, this is going to be an awesome house. Really great.
Or just a home cook.
Yeah, that's true. If you just like cooking, it's almost as big as it's about your size, Mike. If your kitchen,
Large.
you got a big kitchen. Yeah, you have a pretty big kitchen.
Cooks, not your house.
Yeah. So
You a chef or sous chef?
That's it. Yeah, or a home cook. Yep.
Yeah.
So and that house is 1.3 miles to the beach and like 0.8 miles to the Gulfstream Casino. So it could be used as an Airbnb. This neighborhood could be an Airbnb neighborhood. It could be a rental neighborhood. It could be just, I want to buy the house and live in neighborhood.
Yeah.
So there's a lot of options for that house. We're putting that house on the market at $625 next week, which is very well within what the neighborhood is going for.
Excellent.
So just wanted to say, everybody, thank you for trusting the Florida Home Pros, for trusting the mortgage firm, for trusting Brightway Insurance. Juno Beach, the only office is the Juno Beach office.
You know it.
And also, we have given out referrals to a bunch of contractors this week who needed help. We do that. If people need help with contractors, let us know. We have, we were going through a database. We have over 235 small business owners in our database.
Wow.
So we're calling them all now and trying to see if we can find out who wants to be involved by joining forces and trying to get the word out for all the companies. We felt that would be a fun thing to do, and also just supporting small business owners. So we're there for you. And then, of course, Trident Title is closing a lot of these deals. Trident Title, the largest title company in Florida. And finally, we also referred out a couple of people to the office of Paula Krasker recently. So thank you guys for trusting our one-stop real estate shop here at Florida Talk Real Estate.
Yes, thank you very much. And always remember that is a .com, FloridaTalkRealEstate.com, your one-stop real estate shop. This is access to the entire team, as we noted, and some that didn't get mentioned. I saw some nice news for Jarrett and his group, Perry Group, this week, which is awesome. So there is a team of pros. You got access to this entire team, y'all. FloridaTalkRealEstate.com. Find us on Facebook as well, and on the old YouTube there. That's Florida Talk Real Estate LLC. Remember the .com. Know it, use it, love it, and share it.
Oh, and one last shout out. I forgot. Muriel came to us. She's going to be selling 2 houses down here and then buying up in South Carolina. She's using Mike for that deal, just like John and Katie are using Mike for the deal up in Lake City. And her house is inspected and appraised.
Nice.
And now we're on to the second house. Now we're going to sell her second house, just like John and Katie. And then she's going to be buying up in South Carolina. Now, here's one of the things that was really, really good example about having a team to do this seller buyer, even if you're going out of the area. Muriel is using a real estate agent she's very happy with, but that agent isn't really talking to her about what's happening down here, which I feel like is a big mistake. We communicate on everything on all levels. All the different areas when you're moving in multiple places or have multiple deals going on. So Muriel found 2 homes that she was very disappointed on that she couldn't make offers on because both houses weren't sold yet. So I told her, if I were you, I would go back to Mike and find out, since you know that the first house is closing, is there enough money that if you did find your dream home, that you could still get financing for the new home, even if you have the second house. And we found out that probably is true. So now she has more ability to buy the dream home she's looking for up north.
Wonderful.
And her other realtor wasn't talking to her about that. She would just say to the realtor, I got to wait for the houses to sell. And the realtor's like, okay. Instead of like getting a little deeper and saying, well, maybe we could work this around to get you what you need. Because if the one pops up and you're not ready,
Yeah, I think the question is, can you get into contract on the purchase and have like a plan A, plan B, maybe even a plan C to make sure you can close and perform your end of the deal?
Right.
And so Yeah, plan A is that she's got proceeds from both sales. You don't have to worry about that, and she still qualifies. And so, is there alternatives? And so, yeah, she does have alternatives.
That's a beautiful
That's
thing.
good news.
And that's why it's really great to have a team that's communicating with each other.
And it was
all
funny
the
because it
time.
was very similar with John and Katie. Like they wanted that same.
That's true.
And it turns out they're going to sell
Both.
2 properties that they wanted to sell prior to buying and able to do it. But they had flexibility. They had options. They had different plans.
We call it the waterfall, the safety net underneath the safety net. Plan A, Plan B, Plan C. We try to do that. Why don't we go ahead and take the break? On the flip side, we're going to be talking to Ross. I can't wait. Ross has been very quiet over there. We got a lot to talk about with insurance. We just had Adalia just plow through us just recently. We're going to talk about what the future holds for our insurance market and hopefully some insights on tips to save the most money you can in today's market, which is really tough.
Oh, very, very vital. Absolutely. Everybody looking to save a buck when they can. If you'd like to be a part of the program, you're more than welcome. We're going to do a 4-minute reset. Great time to jump on. 877-927-6969. Jimothy will line you up. Of course, if you're not comfortable on the radio, always remember Florida Talk Real Estate is a .com. Your one-stop real estate shop. You have access to the entire team at FloridaTalkRealEstate.com. We're back in 4 minutes. Great to have you with us every Saturday. Florida Talk Real Estate right here on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Real Radio weather.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A mix of sun and clouds this afternoon with high temperatures in the upper 80s and low 90s. Partly cloudy this evening with overnight lows dropping back to the 70s area-wide. A coastal shower chance early Sunday with a mix of sun and clouds as highs return near 90 degrees.
This report is sponsored by Wendy's Breakfast 2 for $3 Biggie Bundles. Wendy's new Breakfast 2 for $3 Biggie Bundles lets you choose from your fave 4, including a sausage or egg and cheese biscuit, small seasoned potatoes, or medium hot coffee. Limited time only during breakfast hours. U.S. price and participation may vary. Not valid in a combo. Single item at regular price.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it, toll free. If you'd like to be on the radio, dial it up, 877-927-6969. Jimothy will get you going there with your questions, comments, concerns in the world of real estate. What's up, Jimothy?
Hello. Good morning.
Hey, good
Mr.
morning.
John.
Yeah, Johnny C, that's me. Of course, you got your starting lineup every Saturday here, Florida Talk Real Estate. It's nice to lean on the pros like Ross Komarinetz with Brightway Insurance, Juno Beach. Ross, how are you?
Doing all right. It's good to be here. Good to see everybody.
Good to see you as well. Speaking of seeing, we are set up in studio with some cameras. Remember, you can live stream with us, Facebook and YouTube. That's Florida Talk Real Estate on both. You'll see Mike Rauch, the mortgage guy from the mortgage firm. Hello, my friend.
Good morning. Yeah. Come see me.
He's right
Live.
there. He's
That's
live
right.
streaming. Bada bing.
It's not just a voice.
No. So much more. So much more. And of course, Jimmy D's here too. That's Jim DePola, our fearless leader. He runs a top producing Keller Williams team, the Florida Home Pros team at Keller Williams Innovations. Jimmy D, how you be?
Pretty good. I was doing phone calls last week, calling our database, just checking to see if there's any needs out there. And
Nice.
one of the guys, Chad, he just talked to me a little bit, kind of quiet. You never know what you're going to catch because you're calling him off, not expecting the call. And then at the end, he's like, "Oh, listen to you guys all the time." He's like, "Jimmy D." It was kind of funny. Yeah, it was kind of
He
funny.
surprised you?
Yeah, and I was like, "Oh," because he was so quiet at first. And then, it's like, "Jimmy D, I listen to you every week." I'm
Love
like, "Oh, wow, that's so cool."
Very much.
He also said Johnny C. Everybody says Johnny C, of course.
Yeah.
Um,
And Jimothy.
got a lot to talk about today. We're going to go into insurance. Let's just kind of put some things in perspective about insurance right now. We've always been on the cut. I'm very proud of this about this show is we've always been kind of on the cutting edge of insurance news in a way. When remember gap insurance was big for us and we were showing people how to save money with gap insurance for hurricanes. And it was really good savings for a lot of people while it lasted,
For
right?
a second, yeah.
Yeah, but it worked. And then we also gave all that great information, thanks to Ross, about the third nail, trying to make sure that people save on their insurance rates by strapping their house to the most recent code so they can get the full credit. This is way back before everybody was talking about what a mess insurance would. Well, Florida insurance has always been kind of messy anyway, but not as bad as it is now. Now we're in total crisis mode as far as I'm concerned.
Well, now it's got everybody's attention.
Yeah. And it's just been nice over the years how we figured out how to save money for people and stuff. And right now we're in a cycle where saving money is very difficult. It's almost impossible to save money. You just do the best you can with what you've got right now. Am I correct about that, Ross?
Yeah, I mean, there's just not a lot of options.
Mhm.
We used to have a lot of supply, and now we don't have any supply. There's just so few carriers that are actively writing policies that we just don't have the option to go, oh, look at this. You probably didn't check this carrier, or just because there's so few. I mean, we have, we've been pretty lucky where we do have one carrier that we've done a lot of work with recently. If you have a roof that's less than 5 years old in Palm Beach County, it's that's unbeatable.
Oh,
So,
it's a good.
yeah.
It's
So
a
if
good
anybody's
deal.
listening that has a 5-year-old or less roof and you're with Citizens, you should give us a call.
Oh, that's really important news. There you go. There's the savings that I'm sure over the next couple of weeks we'll have those stories. So
888-973-7828, FloridaTalkRealEstate.com.
That's based on the age, like when the roof was put on?
Yeah.
Originally, or just even a re-roof?
If the roof is less than 5 years old.
Okay.
Yeah, so it could
I'm
be a
saying,
re-roof.
Like
It
you
could
could have
be
had
a
a new
re-roof.
roof put on an old house. Would
Yeah.
that be the same as a new construction within the last 5 years? I guess.
I mean,
is
it's
my-
not going to be new construction rates, no.
Okay.
But most companies, if the roof is over 10 years old in Palm Beach County, it's the coverage gets very limited.
Okay.
Mhm.
And even with a newer roof, there's not a lot of companies that are super competitive if they're older homes. So, we do have one company that is very competitive if you have a new roof. So if you're with Citizens and you have a new roof, you can get away from Citizens and probably save some money.
So speaking about the choices out there and everything, this is a couple just stats I've either remembered over the time that we've been talking about this in the article I read this morning in the Sun Sentinel. So if I'm not mistaken, I think 6 companies went under this year, which was like some kind of record. 6 insurance companies. Was it last year?
Mhm.
Which was some kind of record at the time, if I remember. And right now,
I think that's like a record for any industry.
yeah,
When
yeah,
6,
yeah.
major company, staples go out of business in an industry. It's pretty
Yeah,
crazy.
can you imagine? Right?
Not
Like if
just
Ford and GM just
not just getting out of Florida, but just like they're not even in the game anymore.
I mean, gosh, I got to think about the last couple. I mean, some have pulled out of Florida, but most just where it's dried up.
Wow.
So,
Yeah.
Man.
And then we have 14 right now, according to the Sentinel, that are in some kind of having financial problems, 14 of them.
Phew.
And there's 15, they say there's like 15 companies left. Does that sound right, Ross?
I mean, maybe that have policies on the books.
Yeah,
but
that's
like
probably that's the way I'm
new,
reading this.
Writing new business,
No.
at least in Tri-County. No, we don't.
Oh
have
no,
that
I'm
many
sorry.
there.
14 companies are currently, I'm sorry, I got this wrong. 14 companies are currently in liquidation, bankruptcy, right? Well, I shouldn't say that. 14 are in liquidation. I don't want to get in any trouble. And then 15 others have stopped writing policies in the state.
Oh, I
This
mean,
is
that's-
according
yeah.
to the Insurance Information Institute in New York, right? According to them. So we're having a big problem now. Here's
Ross said something that freaked me out a little bit because I guess there's this like 10-year mark, right? So my roof is 9 years old and I don't have like any options to begin with.
Well,
you say at 10, it's going to get worse.
No. I'm just saying, right now, 90% of the time, Citizens is going to be the most competitive,
Right.
Unless it's new construction, right? And Citizens will take your roof no matter what. I'm just saying, if you want to go get a new policy right now, a new policy, then
and
if it's over 10 years old, the chances are it's going to Citizens.
That's wild.
So
10
even
years.
most of our 2002, 2003 houses, Citizens.
Yeah.
Because chances are it's a 20-year-old roof. 20.
So a lot of people listening that do have Citizens, they will get that mail where they're like, hey, there might be this one option. There's this carrier that might come into play, right? And then sometimes you're not forced because the numbers aren't right. You get to decide. And then you may get that lucky one where they're like, hey, they're actually predicting that your renewal is going to be less. And you're like, boom, nice. Even if it's just a couple $100, you're like, sweet. And you slide over, but you're like, ooh, never heard of this company before. And that's where should you get on the phone with Ross and be like, dude, do I just do this? Like, do you pull the trigger, Ross, instantly when that happens?
Well,
Save the money no matter what?
it ought to, most people are going to go to save money, but I mean, when, it's a company you've never heard of, I always say, well, tell me a company you have heard of and I'll get you a quote from them.
Okay. Very good.
And nobody ever goes, oh yeah, I've heard of, Florida Peninsula, everybody, it's, well, I've heard of, Nationwide, Geico, Progressive, all,
the ones that advertise.
But none of them write homeowners insurance. So,
okay, fair enough. That's fair enough. And I'm trying to maybe kind of associate with how that day to day for folks, because I know they've seen that mail. I've seen the mail, right? And I've been like, ooh,
right. But just out of the blue, I say, like for my clients, we notice their rate goes up, we automatically shop it. send them a quote, chances are whatever company they have now, I send them a new quote for another company. They probably never heard of that company.
Right.
So the difference between going to Citizens, a company that, pretty much everybody's heard of, going to a different, a company they've never heard of, that's, we're kind of doing that every day when we're sending our clients, new quotes for their renewal anyway.
Right. I'm sorry, Jim, that I kind of took you off. But when he said that 10-year mark, I was like, man, that kind of freaks me out.
Yeah,
I
that's
don't have
just
a ton
new
of options
business.
anyway.
It's so confusing.
You're going to go from 2 options to 1.
Right. In a year.
Right.
Yeah.
So this is how bad it is for Citizens right now. Okay, is that we have $531 billion in exposure for Citizens Insurance, right? Ian cost about $113 billion. Okay, they were expecting that Adalia was going to be 18 to 20 billion, but Florida, no, I'm sorry, $7.5 billion for Florida. They thought 20 billion for all the states, including Georgia, South Carolina.
Is that including flood insurance?
No, they're just, I don't know,
because that's usually
I would assume not. If
the pretty bad. That's usually that storm surge is usually kind of what
caused
causes
most
a
of the damage,
huge amount
right?
of damage. So.
Well, it's a good point. I'm assuming no, because they're talking about Citizens exposure, so that would not be flood, right? So that would be Citizens, so hurricane insurance, if you will, 531, right, billion. So Adalia looks like it's only a $3 billion hit, so we're okay. But what they were trying to do is they said if that had gone a little farther south, right, and it hit more like Ian hit originally last year, right, where it was 113 billion, they said if that storm had hit like Ian, that it would have been pretty bad, and we might have went to, this is why I'm bringing this up, they said if we get a storm like Ian again, this article saying that we're going to start having to do that measure where all homeowners have to pay a special tax to make up the difference for Citizens. That's how much insurance Citizens is covering right now. One big one, and we're not going to be able to cover the bill. And then that means, so what happens is, from my memory, every homeowner, whether you have Citizens or not, has their insurance rate gets jacked up to make up the difference.
So
right?
it starts with Citizens policyholders first. And
it
there's
starts
3
with
different
Citizens.
tiers. So there's like a, one tier percentage wise, another tier. But if you hit all 3, I think it's 3 tiers, the total that each Citizens policyholder could be assessed is 40%.
And then if they still don't have the money,
it goes to the private carriers.
Then it goes to the private
policyholders.
carriers. And then if there's still not enough money, then it goes to car insurance, auto insurance, and everybody gets it over there too.
Say 40% of what, your premium?
Yeah.
So
which, I mean, you're still paying 40% less per year than you would with the next best carrier.
Yeah.
So, it sounds, daunting or scary, but
we subsidize corporate America all the time, though. And I know that sounds terrible because nobody wants to be forking over more money right now, but it's not uncommon to totally subsidize all kinds of aspects in this.
Our entire system is subsidized.
Absolutely.
By taxpayers.
Yeah, 100%. Yeah, no doubt. So it's not totally like out of the norm. It just feels like Florida's kind of being.
I just feel like it's going to be extra bills on people's backs if that
Yes.
happens, and it's going to be a shock. And it's going to be what is it? DEFCON 4 is the good no. What is it? DEFCON 1? I always forget. Is it the higher number better or the lower number?
5 is wartime.
War. Okay, that would be like DEFCON 5. Okay, it's like everybody's starting to pull extra money out of their
800.
pocket. Yeah, exactly. But we're in a crisis mode now. But just because we're in the red zone. But if we get that and that happens psychologically, I think that's going to create chaos, to be honest. I mean, not like people running in the streets going crazy, but it's going to be really bad. And I think psychologically it would not be a good thing. And I think it would really affect our markets down here.
You could see a landslide kind of happening with like people like, you know what, I'm not paying my Citizens policy. Screw them. And then all of a sudden their lender puts them in forced place. And then all of a sudden their mortgage payment gets way more than they can handle. And then you can see where that goes from there.
That's vicious.
And
goes that way.
Wait, and here's some more rosy news about the insurance company. Remember all those legal changes that they did last year to fix our insurance problems for fraud?
Right.
Right.
Yes.
That's going to fix everything.
And we thought, well, we don't.
We'll see.
Well,
We'll
we
see.
always said we don't
Yeah,
know. It'll
yeah,
take
yeah.
like 18 months minimum. Well, I'm not liking
board.
this news, but they're saying it's good news. But to me, it didn't look like good news. Before they put the regulations in place, there were 900 lawsuits a month and 900 lawsuits a day in the state of Florida, right?
Day.
Now, right, a day, 900 a day were filed in Florida, right? For
Something like
insurance.
100,000 filed the day before the law went into effect.
Right. But
Right,
900.
right.
So now with the new regulations, what do you think that number dropped to?
Oh,
9
yeah.
I have no
a
idea.
day.
Yeah. So
I'm gonna
instead
say,
of
I
900
think
a
it-
day,
no, I'm
they
not
put
saying
in
9.
these new
I
regulations.
think it
That's
went way
right.
down though.
Okay. What do you think?
100.
100 a day.
I have no clue. I'll say
What do you think, Jerry?
150. No,
yeah,
stay right
200.
around that.
700. It only
Yeah.
went from 900 to 700. To me, that doesn't sound like it's working.
No.
I'll tell you what. I was talking.
I don't think we
to-
have to wait 18 months to say that this is not working,
True.
right?
Well, I mean, you'll find out. You
Right,
can
we
still
will. I
sue
might
the
be wrong.
insurance
I might
company,
be
but
wrong.
if the insurance company does not have to pay the attorney's fees,
True.
because they only have to pay the attorney's fees if it's like gross negligence. It has to be something where they, violated the insurance contract. But
The other
it's
thing,
not going to be where, okay, now, we're paying 60,000 for the new roof, and then we're paying 300,000 for the attorneys.
I was talking
Yeah.
to a lawyer about this the other day, and he said one major change there also was that the attorney's fees come out of the claim payment, not on top of the claim payment. So if you get awarded 50,000 for your, the damages or whatever, and the attorney fees are going to be 30, 35, whatever % of that, you then only have, the remainder for your damages, and the rest go to the attorney. So
Right,
instead
so
of
it's the
instead of
same way that
50,000
you-
plus attorney's fees is 50,000 minus the attorney's fees for the plaintiff. So
yeah. So if you do sue it, if you do in these legitimate, like, or whatever the lawsuits, if they do whatever win, or then it's got to, if the attorney wants to get paid and you want to sue the insurance company, you as the insured have to give him your piece. The insurance company isn't paying the attorney's piece anymore.
that seems like a major hit to that practice, right? Like the lawyers just aren't going to be, because the expectation of getting paid have to be way down from what they were.
It seems like
prior
a
to
major
that.
hit for at least the setup, right? The premise of fraud or trying to
Yes.
But
scenarios
that's
that
the
aren't
purpose.
legit. But when the numbers only come down by
But I think
That's
80%.
20%. That's only 1 out
20%.
of 5 stop.
Yeah,
it's
it's
like
not-
a 1 out of 5
I'd
drop.
be, but
But
is that
that's
every month?
okay,
Yeah,
because the
right.
insurance company is still not having to pay additional funds to the attorney. So if the insurance company loses and it's 60 grand for the roof, the attorneys, and they give them 60 grand, the attorney's going to take
That's it.
40%.
that's it,
Yeah.
regardless of how it shakes
So I
out.
mean, you can still sue the insurance company.
Yeah.
It's just that you're gonna, if you win, you're gonna have to
Oh, I
work out
see.
whatever deal
Yeah,
to
even
pay your
I see what
attorney,
you're
you know
saying.
what I
I'm
mean?
getting that point. Yeah. So there maybe I'm wrong about it, but to me, when I saw those numbers, like that doesn't sound very good.
I think me and Jim were both under the impression that you could no longer, it wasn't designed that way anymore. So it's not where the attorneys are getting paid. We only get paid when you win, right? Type scenarios. Like you have to literally come out of pocket to
Yeah.
pay the attorney fees now. I think we were under the impression that that's the way this was being set up. Not like
You kick it down the road and you find out
reshifting
what
of how
happens.
the attorneys got paid.
Yeah.
Like a full shifting of how attorneys got paid.
And it could
No
be that
longer
way,
come-
Johnny, but it's probably up to the individual attorneys.
Yeah,
Like,
it's going to be
they're-
whatever you work out with your attorney.
Yeah.
If he wants to take it on a contingency basis, where
Yes.
he's going to get a rip of whatever
So
whatever
that's the way
you
That's
get.
the way it always was, though, right?
Well, that's the way it is. If you slip and fall,
right.
and he
Ambulance
sues
chasers, et
Walmart.
cetera.
Yeah,
No offense, but
yeah.
No, but they
A
said
lot of-
even if you were awarded $1, right, in your claim against the insured, then the attorney was getting paid,
That's what was
right?
happening
And
for
so
full
now
my
if you get
lawsuit.
awarded
attorney.
$1, that attorney's getting 40
That's
cents.
what happened with my
So,
lawsuit.
so all that happened is just a shifting of how the attorney got a piece of the rake, right?
Yeah.
I think, were you under the same impression? I was in the impression that they flat out changed it to like, no.
Mhm, Me too.
The attorney doesn't get paid out of any of the proceeds anymore. You pay your attorney. That's how you stop the fraudulent claims, right?
Which
Anybody that's willing to just be like, I'll take whatever I can. You're only going to get paid if I win. No. You pay your attorney to file the claim.
I think it is like
Well,
that. Though,
so, yeah,
John.
I mean,
just
so
that
it's
the attorneys are
basically-
doing it contingent on whatever you get.
But if you don't win, they don't get paid. Make it so that you have to pay them regardless if you win. And now this $700 a day or 700 claims a day comes way down trust.
But so, I mean, that's typically what you're doing, because the attorney has to take the case and go, man, is it worth my time to get this guy $25,000 for his roof? And then, I'm going to get $8,000 out of this, and I got to pay all my staff and go to court and file everything. He may just say, no, I won't take this on a contingency basis. You're going to have to pay me. So it's basically shifting who's the insurance company isn't paying the attorney's fees anymore. The insured is paying the attorney's fees, whether he writes him a check and says, hey, go sue these people, or the insurance company goes, okay, insured, you won $20,000. And the attorney goes, well, our agreement says I get 40 of that.
Yeah.
So it's just shifting who's actually where the attorneys are getting their money from.
Little of it actually goes to court, though. I mean, really, just like across the board, even criminal cases, so little of it actually goes to court.
Right, but a lot of those settlements still included attorney's fees. So
you're right.
So now if you settle at 20, the insurance company isn't having to pay $20,000 for your settlement plus the attorney's fees. They're only given $20,000, and then the insured is given a piece of that to the attorney.
Yeah, so it does. I understand that how it trims it down. It still doesn't fit right in my head, though. But yeah.
Well, instead of it, so out of those 900 lawsuits, right? 7 they're paying. Say they win them all, they're paying $30,000 for the new roof, plus $100,000 in attorney's fees. So we've already dropped 200 of those.
Right.
So, now we've just dropped $2 million, right?
Yeah. So it does shrink the payouts considerably,
And
even if they do lose every case.
And now if they win every case, the insurance company isn't having to pay $100,000 in attorney's fees for each one. They're only paying $20,000.
Yeah, no,
for the roof.
You definitely fit it in my head a little bit better that way. Yeah.
Okay, well that makes me feel a little better.
A little better,
because
yeah.
I felt like we're seeing a lot of doom here. So maybe
I mean,
was
that's the
being
way I
too-
see how
too
it's
negative.
working out.
But
because-
that's why it's always great, having professionals here to talk about this stuff, because as a layman, to me, this is all scary stuff right now.
Yeah,
right?
I
I'm not
am.
liking this.
Yeah, I
Um,
just
I
don't think
just-
you could force attorneys like to collect up front like you're thinking, Johnny. Like, okay, you can't even bring a suit unless the plaintiff pays you X amount of dollars. All right. It's almost like, hey, you have to pay an application fee to get into the lawsuit.
Well, that's
right?
the way I kind of took it.
Yeah, but
it's the only way, in my mind, at least the way it was fitting, it was the only way you trimmed that out.
I think there's space for that, but it's up to the attorneys whether they want to
Yeah.
take a contingent or they basically say, hey, listen,
True.
Johnny, I know you want to bring this suit. You don't
Contingent's
have
easy.
a chance and whatever, but so I'm going to charge you $10,000 to do it.
Contingency's
You want to
easy
do it or
'cause
not?
So much of it, the attorneys aren't even doing. It's their paralegals filing everything and doing everything. The attorneys don't even touch it 90% of it. You know what I mean?
They probably do at some level. They have to get into it at some point. You bring in the closer, at
Yeah, a
some
little
level.
Yeah, a little bit. Paralegals do a lot.
Yeah, Dawn, who's listening to us on Facebook, she writes, insurance is a ripoff. Pay off your house, be your own insurer, dump the insurance company, profiting off of people. So I feel like there's more and more people that are going to feel that way. You don't know how many calls I get over. I've never got these calls before. Do I have to have insurance?
Yep.
I'm like, do you have a conforming loan?
Do you have is there a financial institution with an interest in your
Yeah,
property?
exactly,
So yeah, you're
yeah.
gonna have that.
Yeah.
But she's right. Pay off your loan, and you do not have to have insurance. I don't know how you be your own insurer other than, like, if you think about that. Let's say you get $200,000 of dwelling coverage, and you're paying $3,000 a year for that coverage. Like, how long would it take you to have a $200,000 kind of level of coverage? So I think be your own insurer means just be prepared to do a lot of your own work if you have damage, and have money saved up for it, which is a scary thought for a lot of people.
Yeah.
Right, especially right now. Yeah, think about how much money you've been able to save in the last, 6 months.
It's such a novel idea though that insurance is a ripoff. Right?
Never thought of it that way.
Let's go ahead and take the call.
Oh, we got
You want to do that? Who we got on hold there, Jimothy?
We got Peppy on the line, and he has a comment about attorneys. Peppy, welcome to the show.
Hey guys, I know my comment's not going to make a difference or mean it's not going to change anything, but all I hear you guys talk about is attorneys, attorneys, attorneys. It's just like our government. That's why everything is screwed up. These guys got these laws so twisted and turned. You're telling me they get 40% of what they recover on a claim? Is that right?
Well, that would,
probably
I mean,
ballpark.
I don't know what attorneys charge, but I think from just being around and the kind of number that people always think about, if you fall down in Walmart and sue them and win $4 million, I think the number that everybody kicks around is, oh, the attorneys get about 40% of that, right?
Yeah,
Or
I
in
think
a
like
big lawsuit.
in personal injury, it starts at like 35%,
Yeah.
and then if
Ballpark.
it has to go to
Okay.
court, it
Yeah.
starts to change. So
Well,
I think that's in the realm of
we're not
reality.
here. We're not here to defend the insurance industry or the Florida bar. We're not here to defend those professions.
I really had the conversation with the attorney who represents policyholders or plaintiffs, because I hear a lot of why the fraud is a problem, and I don't hear a lot from the perspective of the attorneys who are saying, hey, listen, yes, there is some of that, but here's some legitimate challenges that we have on this side. This is why we have to sue insurance companies.
Yeah, and there's truth to that, because I
there's
went
always
through
two sides.
Heckenback. I went through Heckenback when I had my insurance claim on my house, and they just would not budge. They would not budge, and we were totally legit. And it took us 18 months, I think, and we went through mediation twice. Ross was at one of them. We went through arbitration mediation twice. We went to court. Then at the end of the whole thing, listen, this is the part that drove me crazy. We finally said, I guess we're going to trial, and then found out that we couldn't go to trial because there was a clause in our insurance policy that doesn't allow you to go to trial. So the whole thing was just settled outside of court. And I'm like, why did we even go to court in the first place? Yeah. Right. And they didn't say that for 18 months. Right. The insurance company never said, hey, we're not even supposed to be here. So anyway, I'm sorry, Pepe.
Oh, no, that's all right. I'm just, listen, I have the problem with our national government. It's all attorneys and it's all screwed up. And this thing here with the insurance, it's obvious that the attorneys got their digs into this and are just twisting it. And it's costing all of us money. That's what it's coming down to.
Yeah, but and you're 100% right about that. But that's like with every facet.
Tort
I mean,
reform.
But what was crazy, it's like
Special session.
the majority of the lawsuits filed by like an insane amount, it was done by like 3 firms.
Yeah.
Mm-hmm. So I don't know.
Yeah. So
we had the special session.
They had a machine.
Our legislators seem to have a path that we're on right now, where should be some improvement in our future. Obviously, there's some things that they can't control that might come in play, like another big storm or two, which will really throw things on its head. But there's a path we're on right now that should be improving things, Pepe. We'll find out together. I know many are about as skeptical as I am that we'll end up rosy, but all we can do is hope that they're on the right path.
Well, anyway, like I said, Jimmy DePaula, you've helped me out and talked to you guys before. I listen to your show every weekend. You guys are great. Keep doing what you're doing, because it does help. Like I said, I'm not going into practice with them. Jimmy's talked to me, but I think you guys do a great job. So just keep it up.
Thank you. I appreciate it. I hope you have a great Labor Day weekend, and everybody happy Labor Day weekend.
Right.
I didn't say that, I forgot.
Yeah, enjoy, Pepe. Thank you for being out there. Thanks for the support every Saturday. 877-927-6969. You want to reset?
Yes, we do. I just wanted to say to Dawn, thank you for listening for years. She just sent a message saying she's been listening to us for years. So Thank you, Dawn, so much. And thank you, everybody else that's been listening. On the flip side, we're going to have questions about roofs. Everybody asks about roofs. We're going to go over 101 for roofs again, because I just had another realtor call up yesterday, not understanding roof issues. So it's important that you understand what's going on with your roof. We're going to talk about that with Ross when we
I'm
get
curious if like the mixed style roof that you mentioned earlier. So it's shingle plus metal. Is
cement tile versus
or tile,
metal.
tile and metal.
But the metal was decorative, wasn't it?
Well, Kind of, yeah,
Okay.
because it has the secondary water thing on it. It was totally dried in.
But I thought it was just like like those kind of, I call them the mushroom style townhouses.
Yeah.
Some people go out and say that's a mansard roof.
Right.
And I'm like, no. That's just decorative on the side. The concrete is the concrete.
Right. The flat part
is the roof, So
yeah.
that's why I was wondering if it was something like that.
No, this actually is a roof. It's like an overhang for the garage part. And
Okay.
it's for the garage. But yeah, so we're going to get into everything about roofs. I bet you we're going to tell you stuff you didn't understand. That's for sure, because it is confusing.
Excellent. 877-927-6969. You want to be part of Roof Talk? You got a question, comment, concern? You're welcome to join us. 4-minute reset. We get back at it. Always remember, if you're not comfortable on the radio, you have access to the entire team. It's FloridaTalkRealEstate.com. Your one-stop real estate shop. FloridaTalkRealEstate.com. Know it, use it, love it, and share it. It's Florida Talk Real Estate on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
877-927-6969. That is that toll-free number. If you're a long-time Real Radio listener, or even short-time, but listening enough, yeah, that's that number. That's how you get through the penthouse. Locker room coming up next. That's our toll-free West Palm Beach number, 877-927-6969. You got questions? You got comments, concerns in the world of real estate? Dial it up. Jimothy's going to pick up that line. He'll line you up. How are you, my brother?
Doing mighty fine. Good morning, Johnny.
Good morning to you. Good morning to Ross Komarinetz with Brightway Insurance, Juneau Beach.
Juneau, that's right.
Man,
Happy Labor Day.
Happy Labor Day weekend to you as well. Mike Rauch, the mortgage guy from the mortgage firm. Hello.
Good morning, Johnny C. It's funny. I thought somebody in this room was going to be able to get away without hearing something, but somebody wrote something, and now it's coming out. Here we go. Mystery. Go ahead.
I'm not going to hear something, but somebody wrote something. Now it's coming out.
Yep.
We're a song about it. Want to get here?
Nobody's paying attention. The inside's not paying attention to the comment.
Yeah. Jimmy D's here. That's Jim DePola. Runs the top producing.
Ross knows what I'm
I
talking
still
about.
don't get what's going on. I'm clueless on the own show. Okay,
That's all right.
I'm just
I
gonna
almost
roll
said
through.
something earlier when we had Jimmy D, Johnny C. How
Yeah.
come we don't have like a Mikey R?
Yeah.
Or Rossi? And then I was going to say we don't have it. And then
you just you're like, I don't want to bring it up.
I don't want to bring it up.
Well, I already wrote it on the thing.
That's what I'm
Oh,
talking
is
about.
that what you're saying? He isn't allowed to use anywhere?
No, I thought he was going to get away with not hearing that, but then you wrote it.
I
Now
didn't
here it's
get it.
coming out.
Yeah.
And you might have to do that again, Jimothy, because nobody heard it.
Hot Ross.
Stop
there
that,
he is.
Johnny.
There he is.
Ross is little looking like Grizzly Adams.
The old crinkled up $1 bill.
little
That's
Grizzly
right,
Adams.
Ross.
Well, I'll tell you what, though. So that's Franny for Real Radio fans.
Yep.
Or even if you listen to Mornings with Gator,
Mm-hmm.
Jason and Franny. That's Franny from a few years back.
Oh, yeah, a little while ago.
She's way into beards.
Really?
Oh, man. There would be like such an emphasis on there now. If,
Something we need to re-record it.
You were clean shaven then.
Okay.
Yeah, and now she would be like,
She asked for a picture, too, so I'll take care of that when she gets back from Costa Rica.
I don't know if you got the proper introduction there, Jimmy D, with
It's all right.
Florida
Who
Home Pros
cares?
team, Keller Williams Innovations, top producing Keller Williams team, Jim DePola.
Yada, yada, yada.
No beard, no beard, by the way.
No beard.
Yeah.
Hey, don't
Right
think
now, Mike Rousseau.
don't think I could grow one.
I was like, wait a second.
I
think I'm in.
I got a beard.
I'm in.
I got a beard.
My ears perked up.
So, Ross, I want to talk about roofs, and I also want to get into interest rates because that's like a really big thing for people. So we got to get into with Mike too, but I want to get into roofs first. So I'm going to give you a typical comment I get every day that gives me gray hairs. Tell me true or false. Realtor tells me that the buyer does not want to turn in the offer that let's just call it list price. The buyer did not want to turn in a list price offer because the roof is 7 years old and they're not sure if there was ever a permit pulled. So therefore they're going to have to deal with the roof and they want a discount. Okay. So tell me, let's just say that we know the fact is the roof actually is 6 years old in this case, and there was a permit. Okay. So tell me what's true or false about the statement they just said about trying to get a credit for the roof.
You've got no problem
False.
getting insurance.
Right. So explain that. So if you have a 6-year-old roof, when you do your useful life report for the roof, which is required by the insurance company, right, Mike?
Yeah, I mean,
Well, but for the
by the
insurance
insurance
company.
company.
Yeah.
They
Oh,
require
I mean
me.
by the insurance. I
We
meant to say the
require-
mortgage.
The lender requires insurance to meet certain criteria, and then the insurance requires the house to meet certain criteria.
So when you get a report back that says there's 5 years useful life or more, no problem, right? So what happens when you have like a 6-year-old roof, right? I'm just curious because I've never really seen a useful life on a 6-year-old roof. What does it show? Like 14 years or something?
Yeah, depending on the inspector.
Yeah.
You know, sometimes I'll do, 10 plus, 15. You know, some inspectors just go, it's 6 years old. Insurance companies are doing 20 years. I'll give 14 years of useful life.
Okay, that's what I was just wondering how it works. So in that case, a 6-year-old roof that was permitted no issues, right?
No.
Now, let's say there's no record. Let's say a seller says, "Hey, I put my roof on, but my buddy down the street owns a roofer company did it. I didn't pull a permit." And let's just say that's legit. They really put on a brand new roof 6 years ago, but no permit. Then you do your useful life report, and let's say it gets the same result as a roof that did have a permit, right? Will there be any issue with trying to get the insurance?
No. The only thing that they may not get one discount on the wind mitigation report, but a lot of the times you can get that discount if the inspector puts, hey, on the wind mitigation report, he can put the year that the roof was installed and say no information for compliance and still give that discount. But it all depends on the inspector at that point.
That's a lot of latitude for the inspector because they're basically signing off that the roof was installed and it looks good and it's sound and it's watertight.
But they should be able to. I mean, that's their job.
That's their job.
True.
Now that we're dealing with this 5-year useful life, it used to be 3 years useful life. So 3 years useful life was better for the owner because you had less useful life requirement. But now it's a higher standard of 5 years useful life minimum. So
It's funny how little I see under 5 years.
Yeah, that's what I was going to say. So you're kind of like really trying to divine an atom almost, like it's so little difference. Like can you tell 3 years versus 5 years useful life on a 30-year roof, right?
Yeah.
I mean, so what's happening
I don't know
is
what
it's like,
Oppenheimer would say about that analogy.
yeah, I know
Like,
it's horrible.
right.
I know, right? I haven't seen the movie yet, so you're probably right. But so you haven't seen any real life effect of the 3 year to 5 year, other than you're getting a lot more 5 years all of a sudden.
Yeah, and even sometimes let's say it's a shingle roof and it's 18 years old. Sometimes I'll see 2 years of useful life left on the report, right? Because they're just doing math. The inspector's doing 20 years. It's an 18-year-old roof. We're only giving 2 years of life left. Roof looks great. I'll send the client an email saying, hey, unfortunately, here's the updated quotes, but unfortunately the roof says that there's only 2 years of life left. Citizens is going to require to have at least 5 years of life left. Now your roof looks pretty good to me, and that portion of the report is supposed to be the inspector's opinion. It looks to me like he's just doing a math formula. You might want to reach out to him and ask him, how he came up with this number. Was it the formula, or does he honestly believe that there's only 2 years of life left? And if he believes that there's only 2 years of life left, fantastic.
And there would be,
but a lot of the times I get it back where, okay, I was kind of just doing a formula because that's what I think the insurance companies want.
Yeah,
I get it back
because
with longer life left.
signs of a problem with the roof are, from what I understand, is shrinkage. Like if it's a composite shingle, shrinkage of the tile itself, right?
Yeah, the shingles will shrink. They'll
You'll
lift.
see the silver. You'll see the lifting. You'll see the silver in the
granule
taper,
loss.
the granulation loss, right? The granular loss. All of those are, and then of course, some of the tiles being ripped away, like during a storm, or a tree scraping across it, like branches of trees scraping, causing problems like that. Those are all signs. That's what you're looking for to see if they're useful life on the shingle part.
Yeah, even on sometimes tile roofs. Somebody will say it's an 18-year-old tile roof and only give them 2 years because they're under the inspector just hears 20 years, because that's pretty much the limit that most carriers are doing. So that's all that they just do, that little formula, and you got to tell them hey, it's a tile roof, man. These had 50 years of life 3 years ago, and now you're saying it only has 2? Is that your professional opinion, or are you doing math?
I know Jimmy has some questions because we just had to deal with a useful life with Jimmy's. Everything came out okay, but what were the questions that you had?
Well, mine is we're going to shift a little bit away from the roof, because mine is when we're closing on our current home on October 5th, and we're going to stay in the house. We're kind of renting it back type thing. What type of insurance should I have, and what should I do with my current policy that I have with you? Obviously, I would stop it right on the closing date, but shouldn't I have something for my contents And or I don't know, what would your recommendation be?
Yeah, I mean, if you want to make sure that during that transition from when you sell your home to when you close on your new home, that you want to have coverage for your stuff,
Right.
and some sort of liability coverage as well.
Right.
You can get it's called an HO4 policy or a renter's policy.
Okay.
And for top of the line coverage for the years, like probably $220.
Okay.
Or you can get kind of minimum coverage for like 150.
Oh, okay. So and what type of time? You said a year, right?
Well, those
they're
I'm always talking in annual numbers.
Okay. Okay.
So those are annual numbers, but you get it and you cancel it when you.
Oh, okay.
So whatever.
So you
a
prepay
couple
for the
months.
year and then you get a refund.
Yeah, I mean, or
refund.
or you can pay quarterly. You can still do payment plans on those if you want.
Okay.
But I'm just always talking annual numbers in my head.
Okay, no, that's fine. And then the only other question I had, as far as now, there's going to be a break in time where I'm not going to have a homeowner's policy on one, and then it's like a month, let's say. Is there any penalty there because I'm actually not going to be covered, or will this other policy kind of
fill
count
the gap
for that? Yeah.
Yeah. So when you sell your house, your insurable interest in that home stops, and so you can't insure anything that you don't have an insurable interest in.
Right.
So your belongings, unless you're gonna that renter's policy would give you all the same coverage that you had on your homeowner's policy, minus the coverage for the actual house.
Okay, so there's no gap.
Yeah, if you did
Okay.
that, yeah, and then when you moved into the new house and closed on that policy begins, and then we would cancel your renter's policy.
Right. Okay.
I think he's
Perfect.
thinking like if you had a gap of insurance, maybe you have trouble getting new insurance, but that would be if you had a home that had a gap in coverage.
That's right. That's if you already owned the home, and your insurance canceled in May, and you wanted to get new insurance today on the home you already own, then yes, there would be some sort of penalty there.
Okay.
But when you're buying a new home, as long as you're not going, a certain period from the day you closed without insurance,
correct. Okay.
There's no problem there.
Great.
Yeah, because there's no home to insure.
Yeah.
Right.
Yeah.
Technically, that's why I wasn't sure. I didn't think there would be a penalty, but again, just a quick question.
Here's a random question. I think the answer is no, but I'm going to ask it anyway. Is there like almost like a loyalty type reward in any way? No. Yeah, I had a feeling the answer was no, but you never know.
I mean, I think in the rest of the country there is a loyalty in that, like if you package your policy, you bundle them together and you get discounts. But that we have never had. I mean, I don't know about never, but actually, that's a good question for Jimothy. He's going to have brand new construction. Are any of the major national carriers writing brand new construction?
Maybe State Farm, depending on where it is.
Okay.
Maybe you can bundle.
But yeah.
Maybe.
I wanted
as long as I can stay with Ross. That's the only thing I care about.
That's what matters most.
Yeah.
Brightway
But
Insurance.
we just kind of mentioned, we're talking about bundling and things, but these problems, these insurance problems aren't unique to Florida. I'm part of some, nationwide Facebook groups and things like that. And, they're complaining all over the country about the carriers and stop pulling out, not writing business. One of the things that we're seeing a lot is on auto insurance, we'll get to the very end, pull some reports, and then the carriers want to do some sort of extra verification that could take up to a week. So, and according to the groups that I'm in, they're seeing that a lot with a lot of carriers, where a lot of like what they call pre-bind verification. So, it's not just Florida that's experiencing all these problems. It's a nationwide crisis.
Yeah, it really is. It's just, between the wildfires that are happening all over the place, the tornadoes in the Midwest, the flooding is a big deal everywhere. It's turning into like really bad, and not even talking about earthquakes, right? So we're talking about really bad stuff. I mean, North Carolina just had an earthquake a couple of days ago. It wasn't like super big or anything, and they have them. I mean, even Florida has earthquakes. They're small, but they have them. So we've got all this stuff we're dealing with all over the place.
Sounds like it could be on the election debate stage, you know.
I just was reading
universal
in-
health care, universal insurance, which
Yeah.
actually FEMA is kind of a version of that, right?
Sort of.
Yeah.
How is
Citizens,
FEMA? Is
right?
FEMA in trouble?
Yes, there's a lot of U.S. senators, at least, talking about that. They're very concerned about FEMA and that
It's
FEMA isn't
underfunded.
really charging the right amount
Yeah.
for the damage that's happening, and that if they did charge, it would look like Florida right now.
You know, I would say that most of the flood policies that we're doing are cheaper now than they were like 3 years ago when they kind of had standard rates.
Yeah. And I think that was because they were mandated to do that or something, I think, by the politicians, by the legislators.
And a lot of the times we don't even, you know, it used to be if you were in a high risk flood zone, hey, give me that elevation certificate or else that premium's going to be crazy. And a lot of the times now, even if it's in a high risk flood zone, the elevation certificate doesn't make a difference.
Yeah. I think it's going to get to the point where
Everybody
where-
uses Flex Seal and we don't worry about
yeah.
that.
Well, actually, I think it's going to be cash only in like certain zones. It'll almost be like cash only. You're not getting financing because you're going to be on your own for your insurance. And like oceanfront condos and stuff, I think those are going to be like cash only eventually.
There's a couple places in like Hope Sound that I can't get flood insurance for because they're in what they call Cobra zones. Coastal
Wow.
barrier.
Cobra zones.
Yeah.
Well, and the thing is
Coastal
like once
barrier.
we get
Yeah.
hit over and
Just
over,
like they're like, no, sorry.
yeah. Once we get hit over and over again, I saw a graphic yesterday of the basin, like the Gulf side basin, you know, around the Panhandle all the way, and all the hurricanes just from 2017 forward, and there were like 8 of them all in that bend, right?
Yeah.
And to me, it's like after that happens over and over again, how many times are they going to let people go back and rebuild in the same spot, have it torn down, come back, build again, until the insurance companies say, I'm not doing this anymore.
Well, I mean,
You
that's
know?
what some of them do. They go, all right, we're just not writing in the zip code.
Yeah. And over time, only the super wealthy are going to be able to afford on the ocean
you got
because
Citizens.
it's going to be
That's how it
cash,
happens.
or it's going to be super, nobody wants to buy it and everything's going to be super cheap because
No,
nobody's
you got
going
it
to
right
want
the
it.
first time.
I know it's
Yeah,
going to be
yeah.
super wealthy. You could dream. So anyway, it's going to be very interesting to see over time, over the next 20 years, what's going to happen. That's going to be very.
I mean, I would
interesting.
just like to see a quiet hurricane season and see how kind of everything shook out from the reforms that they did, just to see
Right.
see if it all
Mhm.
works.
Yeah.
That's if we could just have a quiet hurricane season and everything kind of okay, we're not being sued all the time. We can just bring our rates down, and they're not. I just don't want that a bad hurricane to
Overshadow.
the good things that we're trying to do
Right.
to make the insurance a little bit better
The
here.
potential benefits that could be there
Yeah,
if we
yeah.
could just maybe see if this will work.
Yeah.
Please.
And you kind of going back in time, you could see like premiums used to be really reasonable for Florida, right? They were going down from probably like 2008 all the way through what 2019.
19.
Okay.
Yeah, the end. It
Even?
was the end of 2019 when I started to notice the
Yeah.
huge increases, and we started talking about it in March of 2020, and
Yeah.
it just happened to be COVID, but
Yeah.
it wasn't COVID related
But
initially.
then they're saying, yeah, because of all the litigation, basically all of the money was going towards that.
Well, and it's funny too, because you're like, as Ross is talking about it, a lot of people are like, well, my policy's not changing, mine's not changing. And then all of a sudden, everybody gets sucked into that tide. And there's nobody that's been untouched now.
And
Just
when,
nobody.
when did they do the assignment of benefits changes that allow where it loosened up, like you could assign your benefits to, you could have 5 different contractors that were representing your policy and suing the insurance company for their portion of the thing, right?
Yeah. And basically you would assign the claim over to the contractor, and then the contractor just takes it over and he gets paid on your behalf. And I don't know if people know this, but the more work a contractor does, the more money he makes.
Yes.
Right.
So
Is that how that works?
claims somehow got inflated, and then that went into, when the water claims, there wasn't enough, water claim money to get, then that's when they kind of switched to all the roofs.
Mm-hmm.
Because that was it was water claims probably in 2015, 2016 that they were all worried about. And that's when you started to kind of see that limited water damage being put on policies.
This was like pipes bursting or
Yeah.
fittings breaking loose.
Yeah, because people would have like a leak into their kitchen sink, and next thing you know, they got a brand new kitchen.
Yeah.
Because of mold and
Yeah.
Right.
Yep.
Oh.
So we're
all right. Let's talk about something fun. Mortgage
we're
rates.
going to talk about
Mortgage rates.
we're going to talk about mortgage rates, but maybe we should go ahead and take the break.
We can. If
Okay, because it's 10:30.
Sure.
We're going to go ahead and take a break. We're going to, on the flip side, we're going to talk about mortgage rates. And I heard a very interesting theory of what you should do with these high interest rates about whether you should buy or not. And I was very surprised with the answer. So we're going to talk about that too, which is related to mortgage rates and how it affects us today.
Excellent. So very valuable information always being delivered. 2-hour chunk of every Saturday, and we try to keep you entertained with a bunch of information. And we're going to do that for another 30 minutes. If you'd like to join the program, do it. 877-927-6969. If you're not comfortable on the radio, it's fine. Go to floridatalkrealestate.com. You have the entire team there. Pros. We call it your one-stop real estate shop for a reason. It's floridatalkrealestate.com. Know it, use it, love it, and share it. Florida Talk Real Estate. It's real radio.
We're everywhere you need to be. Find your favorite show at realradio921.com.
For more information about contests on the station, visit realradio921.com/rules.
Here's what's happening with the weather on Real Radio.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Jennifer Collins with CBS 12 News. A mix of sun and clouds this afternoon with high temperatures in the upper 80s and low 90s. Partly cloudy this evening with overnight lows dropping back to the 70s area-wide. A coastal shower chance early Sunday with a mix of sun and clouds as highs return near 90 degrees.
This report is sponsored by Staples Stores. Staples has everything you need for the office and the classroom for less. Now save even more with $10 off document printing when you spend $40 or more. Offer ends 9/30. Exclusions and restrictions apply. See associate or visit staples.com/printing for details.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Banging it out for you on a Saturday. In fact, about 25 minutes from now, we'll be passing the baton to the locker room. And lots of sports talk coming at you. We got full swing of college football. Man, if you were listening to the Gators the other night, that sucked. That might be a rough year. Man, it doesn't look promising.
Does that mean we're going to be preempted a lot?
I don't know about a lot. If they suck, maybe.
That's what I'm worried about.
Yeah. So they looked a little bigger on defense, but they don't look fast. I don't know. It's I'm going to save my expectations still. I'm still kind of in the mid on them Gators, but lots of sports talk coming at you. That's right. Go.
Gators.
We're okay for the first 4 games. That much I know. They're all 4 o'clock.
Yeah, good. Look at that. No preempting for a minute, Jimmy D. Johnny C is me. Timothy's our producer extraordinaire. Also going to be running the locker room with Joe and Greek. How are you, my friend?
Doing mighty fine, Johnny. Mighty fine.
Always a pleasure to make radio with you, my dude. Ross Komarinetz with Brightway Insurance, Juno Beach. It's always fun to make radio with as well. How are you, my friend?
I'm doing well. Radio Town.
Yeah, come on. Mike Rao, the mortgage guy from the mortgage firm. Still can't decide if I like making radio with him or not, but one day
I didn't know that. Yikes. Just stabbed me in the heart.
Yeah.
I was looking at football. I forgot I have to cheer for the FIU Panthers.
Oh, why?
Well, that's where my son is going to school.
Oh, really?
Yeah.
Nice.
I did not know
so
that.
they're on a streak right now. L1. They're on an L1. They're 0-1 so far.
That's super cool. Is this his first year at Florida International?
Yeah.
Oh,
yeah.
That's awesome.
Yeah.
I had no idea. That's
down there
cool.
living the dorm life right now.
Yeah, as you say, he's a Panther.
He's a Panther.
Yeah, sweet.
He's thinking about real estate. Is that correct?
He wants, like, his idea is to go on a real estate track. I have no idea what that means at university level. Like, what does that mean? But it's
like, a real estate
I don't think it means you're a real estate agent. I think it's you're.
Oh no, all things real estate.
Yeah, all things.
Yeah,
real
like
estate,
commercial and construction and everything. Yeah,
I'm not going to talk him out of it.
I hope he does commercial.
Yeah,
if he's interested, tell him to talk to me. I know a few people like him.
Yeah,
yeah.
Few pros, maybe some mentors.
Exactly.
Get a foot in the door.
Yeah,
it's so funny though. Like when you're in a real estate or a lending family, I see it go both ways. Where like sometimes the kids, they don't want anything to do with it because they see that it's like a consuming, right? It can be all consuming. Like this business, you talk about it when you're not working, you talk about it at the dinner table. Your finances are very tied to how successful you are, you know, in that. And so I can see people being
in
turned
your
off
life
by
are always like, Mike, let me ask you. Yeah, it's just
But I also see, like at our corporate office, I see a lot of the same last name in all different positions in the company, right? So there's some nepotism happening where it's like, hey, this is it's a good business to be in, right? Like it's when things are going really well, it's good, right? Like it's and when things are tough, only the strong survive.
That's it.
Which is also a good thing.
That's right.
Yeah.
For 11 plus years now, he's run a top producing Keller Williams team. So the strong do survive.
Well, all of us in this room have been in.
I was just trying to round out my introduction.
I'm sorry.
You can ruin it if you want.
I'm sorry. I did, and I did. Did I do a good job ruining it?
Suck at this.
I do suck at it. But
yes, everybody
in this room have been through every single cycle that you can think of. We went through the worst real estate crash since the Great Depression, pulled out of that, right?
My
And
pullout
then,
game is strong.
then we went through the pandemic, right? Pulled out of that. We're dealing with the influx from the major migration and emigration and immigration, right? We have everybody coming in. We have tons of people leaving. Hardly anybody talks about the leaving part, though. Eventually, that's going to be coming out in the news, but you're not really seeing.
You're talking about the in and the out?
I think because the net in is so much greater than,
It's only like 1,000 a month difference.
Just 280.
Really?
Well, that's still a lot, right? Like for our small area, not for the whole state, right? But the net isn't that. I mean, it's still a lot more coming in than leaving, but there's like significant amount of people leaving Florida right now, right?
Look at John and Katie. They're basically converting 3 homes to new homeowners, and then there's only one going out. So that's a positive. There.
Exactly.
3 to 1. 3 girls for every boy.
So it's but speaking
You
of
know
that,
what that's from, Johnny?
3 girls every boy.
I guarantee you know what that line is from.
Isn't it like a Beach Boys song?
Boom.
Yeah.
3 girls for every
That's right.
boy.
Wow,
Yeah.
that's off the top of the head.
Yeah,
too.
yeah.
What were you listening to on the way in?
No, that runs through Beach Boys. I love them in my head.
Nice.
Way to give 800%.
Jan and Dean. Jan and Dean.
Do you know the song though?
Yeah, well,
Yeah.
when you sing it, but I would have never got there. Yeah, but Ross was right there too.
Okay. Yeah, Beach Boys.
Well,
Jan and Dean.
he's a surfer.
Yeah.
Jan and Dean. Did you ever listen to Jan and Dean? No.
I guess
we
not.
get in there.
Wow,
I feel like I
Spotify.
know the name. Yeah, what?
Because it was very similar
Wipeout.
type of music.
Oh, okay.
right?
Yeah.
Isn't Wipeout one of theirs? I think.
Jan and
Jan
Dean.
Oh,
was
Jan and
Wipeout.
Dean. I heard
Oh.
you saying Janet
Yeah.
Dean.
Jan
so, yeah,
and
Oh
Jan
no,
and Dean,
Jan
so.
and Dean.
Jan and Dean is Wipeout.
So,
that's good trivia.
I'm
right
pretty
there.
sure it's Wipeout. Somebody check it out.
Callers.
Mike is doing anything he can to avoid talking about interest rate. You want to continue talking about Beach Boys right now?
Sure.
Okay, so let's just give
Surf and Safari.
was it Jan and Dean?
It's listed as Fat Boys and Beach Boys.
Fat Boys and Beach
Fat
Boys.
Boys.
That must be the
Fat Boys.
remix.
Yeah, it must be the remix.
I'd say so. I'd say so.
I had that record or whatever you want to call it, Fat Boys.
Fat
Did
Boys.
you?
Yeah,
Did ya?
probably the little tiny, what they call this, 45? What is it?
Oh, 45s.
The
Yeah,
little
the
small
little
records.
ones were
Yeah,
the
45.
45s.
Sure.
What was the movie they were in again? Oh,
Orderlies
so good.
or Disorderlies. It's called
Yes,
Disorderlies.
yes.
That
Good pull.
underrated. Underrated.
Really?
fun.
Is that underrated? I'll
Yeah,
have to
it's-
check that out.
Yeah.
That
It
could
might
be a
not
fun.
held up, but
That
that's
That could be
underrated.
mine later.
You haven't seen it in a while.
It's been a
Yeah.
minute. Yeah. I used
Something
to
you're gonna
love
tell
that.
me there's a lot of cliches in that one
Oh.
that might not hold up.
Big time.
Okay, so rates. Yeah.
So the interest rates.
We had some great news this week.
Go ahead, Mike.
It says, here's the headline from Freddie. It says, mortgage rates leveled off this week, but remain elevated.
That's good news.
That's
And I actually saw that, right? I saw that people that I was talking to the week prior
Mhm.
who were like, shopping, and you give them some idea on what the rate's looking like. And then when they got into the contract, came time to lock, it either like stayed the same or maybe got just a little bit better for them, which was good news, right? Which means I didn't have to call them up and say, hey,
Yeah.
those numbers we were looking at last week, it got a little bit, worse for you. It's nice to be able to say, hey, it got a little bit better, right? So you prepare them, and then if you give them good news, even better.
And here's something to consider. For pretty much this whole year, we were going up for 3 weeks, and then we go down for 5 weeks, and then we go up for 5 weeks and go down for 4 weeks, right? And that's kind of what we've been seeing the whole year, right? There's pretty much we were between 6 and 6.5 through most of this year, right? And then we went boom. And that spike, remember we talked about it last week, Mike? That spike was like one of the biggest spikes. It might be the biggest spike since they started recording this stuff in 1971, right? The speed of the spike and the height.
Right.
But we went up for 5 weeks in a row, and now we're down a week. So maybe if we go down a couple of weeks and then go up again, right? And we start doing that, we might be going from the 6 to variance between 6.5 to
7,
6.
7.5.
Well, I was thinking more like 6 3/4 to 7 1/4. Maybe we're going to stay in that range for a little while. I'm hoping, and I don't even like those numbers, but that would actually be a good number. Now, what people forget is over the last 40 years, 7.75 was the average. So we're still a half a point below the average.
Yeah, but I only remember like 3 years ago.
I know. And everybody's
That's all I remember.
3 years ago, it was
18
amazing.
months ago. Yeah, January 2022, 3.48. 3.48. 3.48. I want that again, right? So, Mike, but you have seen it flatten out a little bit because last week we were at 7.23. That was the highest rate since December 2000 or something. And now we're at 7.18.
Yeah, so 0.05,
which is very minimal.
It's basically the same
it's
number.
Basically right. It is the same,
Yeah,
but
and it remains elevated. I mean, it's higher than it's been, in any recent year. It's the highest it's been, and then you have to go back to what'd you say, 2000? 2000.
Yeah, you got to go back
23 years to get back.
So the thing is that but people are still buying. I mean, I'm going under contract all the time with my listings. I have multiple buyers that we're turning offers in right now on properties. So people are still out there.
There's
buying.
buyers still out there, and they're the buyers that we talk about all the time, which is like you can't control the markets, you can't control the rates. What you can control is whether or not your income is stable, somewhat. Your debt is stable. Can you get into a payment that's affordable? And then I think our philosophy is, yes, it's a good time to buy if those conditions are right. And if at some point in the future you could take advantage of market conditions, like from an interest rate perspective, refinance, you just be prepared when that time comes to be able to do it if it makes sense. Right. Otherwise, just get into something that's comfortable for you.
I heard something on, I think it was Barbara Corcoran from that Shark Tank and Corcoran Real Estate before she sold it. She
sold that?
She sold it a while ago.
Oh, really?
Yeah,
they just keep the name?
Yeah, of course. They're keeping the brand. They got to keep the brand, right?
Well, I guess they probably paid mightily for it.
Started out as a waitress. She was a real made by Birching.
She's got a good story.
Yeah,
really
her
good
story is very inspiring.
I've always liked her.
Yeah, she's awesome. Really spitfire woman. And so anyway, what she said when people ask her all the time, should I buy in today's market with these interest rates so high? And she says, absolutely. And I was a little surprised by that because she's very conservative and financially conservative. And she said, yes, you should. And this is why. I've been through, she's been around a while. And she's been through many more markets than I have.
Sure.
And she said, buy it at the 7.5% interest rate. Go ahead and do it because when the interest rates go down, the prices are going to spike so fast, right? That you want to be owning a house because your house is going to appreciate as soon as the property interest rates start going down. Let's say they get down to 5.5. Let's just say that happens.
Yeah, it's not if, it's when.
Then your house is going to be worth so much more. So go ahead and buy it at the 7%. The appreciation is just going to so dwarf the high interest rate you're paying right now. And then you could always refi later when the interest rates go down if you want to, or you cash out, and you get that huge appreciation cash out.
And most wealth is
created. And I was like, wow, that's kind of interesting way. I mean, I wouldn't
seems like
do
an
that.
Optimistic take.
Well,
to me.
To me it makes sense except for one thing. The only thing I would put caveat is assuming that your Mike's situation for buying, which is you really need to buy, right? Your lifestyle is at the point where you feel that you need to buy a home, not just because you have to. I wouldn't take that with necessarily investment properties.
Yes.
I don't know if I would have that philosophy unless you were getting really good cash flow right now and then paid the high interest rate. You're still getting good cash flow.
Yeah, I don't think there's any question at some point in the future, your home will be worth more in the future at some point than it is right now, right? Like you're going to have appreciation where you could sell for profit at some point. My thing is like nobody can predict the timeline on that. So I don't know if that's going to be 2 years, 5 years, 10 years, 20 years. You should be making a decision where you could ride out market fluctuations and you don't have a deadline, right, Johnny? It's like if you told me, and I think I've said this before, say, listen, I need to buy now, or I want to buy now, but I got to sell in 2 years or 3 years for profit. Can I make that happen? In that case, I'm like, well, no, there's no way you can guarantee if that's the case. But it sounds like Barbara's thinking, yeah, you can, because the housing prices are going to appreciate.
She also thinks that the interest rates are not going to be in the sevens. You can tell from that point of view. She has an expectation.
And she's also
that the interest rates are going to flatten out. And as soon as they do,
values will go
up. Values are going to go up fast.
Because
let me tell you.
Your purchasing power similarly to what we've seen, where your purchasing power is affected negatively by prices that are holding and interest rates that are going up, faster than anything we've seen. The opposite would be true, right? Like, so if your purchasing power, if just the interest rate goes down, you can now afford a lot more, a higher priced home. And that, to me, I don't know what would drive interest rates down if everything's normal.
Right.
And I'm thinking, are they coming down if everything is normal? I don't see that case.
Well,
I see like either global or local instability causing some sort of crisis that makes that they're like, okay, we need to give some relief on the lending rates, not mortgages, but just interest rates, right? Like across the board, what does it cost to borrow money?
Yeah, because if the economy's good, if things are good, the interest rate should be 7 or
should
8
be
to buy
holding.
a home.
Yeah.
Yes, it's just the way it is. If they get bad, if things get bad, they'll go down.
I mean, I'll tell you what, if things remain great and interest rates go down, that's still a tough spot for buyers, right? Because the competition is going to go up, inventory is going to stay tight.
But here's the thing: I don't think inventory is going to be tight.
Yeah.
Because if the interest rates went into the 5s, let's say, okay, somewhere in the 5s, a lot of the people that have the 3.5-4% interest rate, they've been holding on to it for a lot longer than they want to. There's a lot of people out there, I'm not let go of the interest rate. Well, there's going to be a point where they're just going to say it's worth it. Their lifestyle, they want to change their lifestyle. Right.
Yeah.
So going from a 4% to a 5.75 and getting what you want and getting huge appreciation on your house.
Yes.
Because if the interest rates are going down, you're going to get a lot of money for your house. Right. And I think that's going to open up inventory because those people are going to a lot of those people are going to finally decide, you know what, let's go ahead and do it.
But they got to go somewhere.
I have
but that's what I'm saying. They're going to take the 5 point. I'm making it up. The 5.5, 5.75. Huh?
Where are they going to go?
There's going to be other people. There's going to be more inventory because there's going to be more sellers coming onto the market.
I've got, a couple of young guys.
You can't have people sitting in their house. It was very unusual during the last real estate crisis we went through that people were living in their house 11 to 13 years. Normally it's 5 to 7. So it was double. How much more can you go than 13 years? There's life stuff that happens.
Oh, sure. I just, we need new construction. Like construction's got to catch up.
And the developers,
the rates coming down. Like, let's just say they drop to 5% tomorrow.
Mm-hmm.
Yeah, people are going to be all interested, but there's no inventory, but there's no inventory. Like, even if you're like, I want to sell my house, like, where am I going to go? We have all these people putting the houses on the market. Where are they going to go?
If everyone who wanted to sell put their house on the market, then that would solve an inventory issue and prices would come down, right? Prices would come down if inventory flooded the market.
I think we'd go into a very churlish market. What would happen is the interest rates going down would create huge buyer demand of the ones that wanted to buy, right?
Yes.
So that's gonna raise prices because we have lack of inventory. But then the sellers, right, the homeowners, they're going to say, you know what? I want to let go of my 4% to get 5.5 because I want to live here now and I don't want to live here anymore. Right. So they're going to go back on the market. They're going to get huge and they're going to be able to sell their house at a super high price than at 7.75.
I think
so. There's going to be more sellers at that point.
It's so hard if you're not a professional investor to predict what's going to happen with any sense of accuracy. And so the only long-term prediction is that homes over the long term appreciate in value. So being a homeowner is almost always better than being a renter unless you're in very short windows of time. Like, how can I maximize my profit in this short window?
Like Ross said, you're building wealth.
Yeah, I mean, that's what America is built on, for the last how many years, 80 years built on home ownership as a vehicle for wealth building.
But we might be in this one-time only cycle in Florida right now. There's a theory about this. I was just talking to an appraiser about this a couple of days ago. He grew up in Broward. I grew up in Broward. We're around the same age. So we've seen a lot. He wanted, back in the 90s, he wanted to buy in Southwest Ranches, which is a nice...
It's the acreage of the Broward.
Well, that's so funny. And what happened was he couldn't, based on his income and credit at the time and everything, he couldn't afford Southwest Ranches.
Yeah.
So he said to his wife, let's go ahead and move up to the acreage
Oh,
because we can get, it's funny that you brought this up. We'll move to the acreage. We'll get the same kind of land and everything, but it's going to be about $150,000, $200,000 less.
Yep.
Right now, Southwest Ranches, I'm surprised because I haven't been there in a while. He's telling me there's $5 million homes out there on the 5-acre properties, right?
There's famous people living in it.
So now he says that now he believes that the acreage is that's what that's going to turn into, is the Southwest ranches of Palm Beach County. And that I think that what's going to happen is Weston and Westlake and Arden in that area, that's going to turn into the Weston of Palm Beach County. All that stuff is going to be big suburban sprawl out there where you don't even have to go east of 441. And the point I'm trying to make on this is that everybody's going to be outpriced, and we're going to be California, we're going to be San Francisco, Los Angeles, Manhattan.
We kind of already have, like, Wellington has a lot of what I would consider Southwest Ranches style, where it's big acreage and big homes and expensive. And so that exists. Southwest Ranch is also more exclusive. I mean, it has so much fewer lots than the acreage in Loxahatchee combined. But I mean, I like that as an idea, right?
The 5-acre lots, though, that's kind of in a tighter area.
Yeah, that's true. That's true.
And that's where they think that it's going to turn into a gentrified area. So we might be going through this weird cycle. The reason why I brought it up, we might be going through this weird once in a lifetime cycle where we're turning into those areas where you can't touch anything for $1 million, like, which would be a lot for down here.
Ross, what were you were saying about young people? I wanted to hear that.
Oh, I've got a couple of young people in my office, and one of them, he would love to buy a house, but right now he's priced out of it. And he's like, if I hear one more person complain about how they're trapped in their 2.75 interest rate, and it was going along with, they do feel like they don't want to sell because they don't want to go pay 7. But like Jim said, if it came down to 5, maybe they're not trapped anymore. They don't have that trapped feeling.
You know what's funny about being trapped in that? People refinanced into those rates for the most part, right? Like, so of course, there were buyers who were doing that, but a lot of people refinanced into those rates, and they refinanced because they said, we're staying, like, we're not going anywhere. We want to save. And
they had a 7 from
or
so,
6,
and so they're in the same scenario. Just down the road from where we are right now,
or 5,
maybe
or 4.
Same amount of time, we're back at 3.
Yeah. I don't think we'll ever get back to 3 again unless we go through another crisis, right? But I don't know, Johnny, I understand where you're coming from about the 7% interest rate and everything. That's kind of the norm. And I'm just saying 7.75 over the last 40 years is the average, 7.75. But the Fed keeps talking about dropping that Fed reserve rate. So we're in the 5s, right? We're 5.5 now. All the economists are talking about.
Would love it.
Yeah,
sure.
But what I'm wondering is why would there be an expectation that would happen if it wasn't the plan? Like, if it wasn't the plan, do you really think it's just hoping against hope?
I think, like,
crazy hope, like,
and if you say that, the stock market
we're
keeps
almost
going.
at the end. It's hard to start this, but we talk about the Fed fighting inflation, unemployment numbers, and spending. And so all 3 of those things are basically the same, or like even worse, as far as like they're a little bit out of control type of thing. And so if the Fed is battling those 3 factors, and those 3 factors are staying strong or fighting back even, what's the Fed going to do?
I mean, Mr. Wonderful says we're in for some big trouble coming up. Kevin O'Leary, he's predicting some serious.
He also has angles. Like, he's pitching something, so he's got right. You know what I mean? Like,
his employee tax credit.
He's pitching. Yes. Oh my God.
Well, he's one that, like, often, like, I think he's predicting 8% interest rates for mortgages, and he's one that's like, I don't understand how we're not in a recession. And it's like, well, dude, employment is first of all. Although he'll tell you, I mean, it's pretty obvious, but yeah, he looks at it like, I don't understand how we not.
Yeah.
This is interesting.
It's all about employment. We've been saying that for a long time on the show.
That's
Watch the employment. That's
everything.
what's going to tell you what's going to happen.
That's right.
Yeah. Anyway, guys, thank you so much.
If the Fed wants to get America to stop spending money, employment's going to come down.
Yeah.
That's just the only way that's going to happen. Thank you very much. I hope you have a great holiday weekend, Jimmy D.
What holiday?
No holiday for you?
No, I'm going to be working the whole weekend.
I'll be working Monday too. Timothy, are you on the
No, we're not.
I did not assume.
Enjoy.
Yeah, for sure.
Thank you.
Ross, nice to see you. And
You too.
always thank you for looking out for everybody in our community here in South Florida. Brightway Insurance, Juno Beach. I hope you have an excellent holiday weekend.
Thank you. I'm going to do my best. I hope everybody does too.
We appreciate your best. And Mike Rauch, your best is appreciated as well. Always busting your hump for everybody that reaches out, needing the mortgage guy from the mortgage firm. Enjoy your Labor Day weekend.
Thank you very much. I don't have any plans, but I will enjoy it.
Sometimes the best plans are no plans.
That's right.
Yes.
Do nothing.
And Jimmy D, you're always out there grinding too. I know you said you're going to be working Monday, but try to take a little bit of time to enjoy this weekend because, man, you do your best for so many folks over all these years. So thank you for all that you do.
You're here.
Take a little time, man.
Thanks,
Enjoy your
guys.
Labor Day
I'm going to
weekend.
try.
Florida Talk Real Estate is .com, your one-stop real estate shop. You have these pros in the studio here and so much more. Your one-stop real estate shop is a team of pros, and they do work cohesively together. You want them all? You want a power of a team? Remember, FloridaTalkRealEstate.com on Facebook and YouTube as well. Speaking of a team, we got the locker room team uniting here. Joe and Greek and join Jimothy. I'll be listening. You guys going to squeeze out a sports show?
Abso-friggin-lutely.
Beautiful.
Go Knowles.
Hey, you piped down over there. It's enough of that crap. Go Gators.
I'm at rooting for them too.
Noel's got a big game against LSU. So, yeah. It's a big way to start the season for sure. I hope nobody gets hurt.
Yeah.
And I hope the Knowles get destroyed. See you next Saturday. Great to have you with us here on Florida Talk Real Estate. It's Real Radio. Pipe down, Ross.